Good evening, ladies and gentlemen. Welcome to our virtual investor briefing. I'm your host, Rachel Curlew, Assistant Vice President of Investment Banking. Today we'll be discussing Mayberry Group Limited, Gary Pear, to tell us all about it. We have Group CEO, Mr. Gary Pear, to tell man Christopher Berry, and CEO Patrick Bataille of Mayberry Investments Limited. Welcome, gentlemen. Happy to have you all here.
Good afternoon.
If you're a fan of to have you all here.
Good afternoon.
If you're a fan of the content, then don't forget to subscribe. Also, hit the bell to stay up to date with the channel. If you're looking to embark on your first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media to learn about how you can get started today. And also, don't forget, we will have our Q&A segment at the end of the program. So make sure you submit your questions in the chat so we can address them at that point. Reviewing MGL second quarter ending June 2025. All right, so looking at the financial highlights, the group reported a net loss of 2.9 billion from its combined net interest and other revenue lines. This is driven mainly by unrealized losses on investments of 3.4 billion related to its 50% stake in MGE. So this 50% stake in MGE exposes the group to fluctuations in the local equity markets. So any downturns in stock values directly affect MGL's financial position. But despite this, it's important to appreciate that most other revenue components saw strong performance. For example, fees and commissions rose by about 50%, FX gains surged north of 250%, and net interest income also grew, which is supported by a 76% increase in the company's or the group's loan portfolio. But, unfortunately, these gains were offset by the market-to-market unrealized losses in MJE's equity portfolio. But this position is an unrealized loss position and it can reverse when market conditions improve. Moving to operating expenses, we're seeing here that operating expenses rose slightly by 6% to 1.2 billion, largely due to higher administrative costs. This resulted in a net loss before taxation of 4 billion compared to a net loss of 865 million in the prior June's period. Share of profit from the group's joint venture rose by 2.2 billion year on year, largely reflecting a property revaluation in its real estate joint venture. Net, the group reported net loss of 2 billion, but net loss attributable to shareholders of 258 million, an improvement on the net loss attributable to shareholders of 706 million last year. And finally, the group also reported total comprehensive loss of 2.6 billion versus a loss of 279 million for the same period last year. Loss per share now stands at 22 cents versus 59 cents the prior year. Moving to the next slide. Looking at the balance sheet overview, total assets stood at 64 billion, reflecting an increase of 685 million over June's figure last year. This was primarily driven by a 3 billion or 32% growth in the loan and other receivables portfolio, along with some appreciation in their real estate investments through their subsidiary Widebase, which I mentioned earlier. Total liabilities rose to 42 billion, representing an 8% increase or 3 billion over the June quarter last year, which could be aligned with the growth in loan book, as I mentioned earlier, but we'll definitely get a chance to ask that question later. Shareholders' equity declined to 15 billion, down 5% from the 15.9 billion booked last year. This time mainly due to the unrealized losses on equity investments through their ownership in MJE, which affected their retained earnings and consequently, this decreased the the sorry, and this decrease in shareholders' equity would have translated to a fall in their net book value. We're seeing a 5% dip to $12.59 as opposed to $13.25 the prior year. But I mean, despite this, MGL maintains a strong capital base with a capital to risk-weighted asset ratio of about 16.6%, well above the 10% regulatory benchmark, indicating continued financial resistance. Looking at the next slide, here we're seeing the balance sheet position in graphical format. So assets are up, liabilities are up, and shareholders' equity slightly down due to the unrealized losses on investments that I mentioned earlier. Moving to the next slide. Oh, I have it here on the screen. Moving to the next slide, we observe the trend in MGL's net book value per share over the past 3 years. As of the second quarter, it stands at $12.59. In the December 2024 quarter, it was at $13.51, but has since decreased to $12.59, primarily due again to the losses in the local market. This is also illustrated on the next slide, where we see both the junior and the main market indexes have recorded year-to-date declines, nearly 10% for the junior market and about half a percentage point for the main market. Combined, it's down 1.26%. Moving to the next slide, we can observe MGL stock performance over the last 2 years. The stock price has been trending more or less between the $7.50 and $8, but peaked at $9.50 back in December. Today, the stock closed at $7.18. Interestingly, MGL's stock price is now trading below its net book value of $12.59, stock price of $7.18. So this signals that, MJE remains undervalued as its stock price is trending below its net book value. So a great opportunity for investors to consider this stock while the stock remains attractively priced. On the next slide, we can see that MGL is actually a strong dividend yielding stock. MGL consistently returns value to shareholders through regular dividend payments. That's one thing I love about this stock. Last year, MGL paid out $300 million in dividends, and so far for this year, they've already paid out $150 million in dividends despite the market headwinds. Over the last 10 years, we're seeing here that the group has paid more than $4 billion in dividends. So they're definitely giving back to shareholders, and we can appreciate here that MGL is a reliable income generating stock that you can add to your portfolio. Turning to the next slide, we can see how dividend per share is tracking on a cumulative basis relative to the net book value per share. Here we're seeing that the cumulative dividend per share, that's shown in gray on the screen, is tracking well above the net book value. It has now reached 15.77 relative to its net book value of 12.59. So this highlights that shareholders have received more in dividends over time than the book value per share today, which again reinforces MGL's strength as an income generating stock. And I mean, the long-term trend here is clear. Cumulative dividends have steadily increased over the past 20 years, rising from $3 per share to $15, almost $16 per share. So great dividend yielding stock to add to your portfolio. And with that concludes my quick analysis. of the Q2 results. So I'm going to jump straight into the Q&A segment. The first question is going to be from me to Chairman Berry. This month marks a remarkable milestone for the Mayberry Group. It's celebrating its 40th anniversary. 4 decades of driving financial innovation and value creation to the Jamaican capital market. So, congratulations to the Mayberry team on this wonderful achievement. So, Chairman Berry, as Mayberry celebrates its 40th anniversary, how does this milestone personally resonate with you? And how do you see the
Well, from my perspective, it's every time I think about it, it just seems it sounds so long and it went so fast. Uh, I think the main thing that we have tried to do over the years is to be um, focused on delivering a good, steady return over the long term. And I think the graph, which shows the stock price plus the dividend, i.e., the total return over the time, gives a very good picture of what we've been trying to do. So it's been a fairly difficult landscape over the 40 years, but we have found a way to make it work and also to keep it positive. Uh, Looking forward, we have been refining our investment strategies, uh, both going into new things as well as refining our stock investment model. Uh, right now, it doesn't seem like it's working too well, but I think once the market turns up again, you will see that we make some great choices. So going forward, we have MGL, the group company that owns all the different investment vehicles, and we have MJE, which is a pure JC listed today. Those are the two major offerings that we have right now. I think CEO Bataille has something in the works, which is not really ready to talk about yet, but it's more going to be more like a fixed income play. We'll hear more about that when the time is right. We'll hear more about that when the time is right.
Thank you, thank you. Yes, I've heard about this play, but unfortunately, no, not the time to to disclose. Sorry, Patrick. Your time will come soon. Patrick, I'll open the floor to
Thanks, Rachel. So let's talk about it. 258 in net losses, but this is a reduction compared to roughly 706 million last year. What are the main drivers or the primary drivers for the reduction? I'll throw that out to CEO Peart.
Hey, thank you for that, Patrick. Hi, Chris. Hi, Rachel. Shareholders, public. What you see, I think the beautiful thing about these sets of results is that it shows a lot of our ethos. So on the face of it, the numbers are very scary. But the first number you look at, when you look on the loss for the period, and you compare that to the capital that the group still has, So you've lost this kind of money, but you still have $21 billion in capital. So it shows that even though the selections aren't giving us our returns ideally at this point in time, we have enough buffers to weather the storm and continue to take on attractive stocks at this point in time. So, if you look at a portfolio, you look at what has contributed to it. The biggest contributor is Supreme Ventures, and that's a consequence of a poor fourth quarter last year. The first quarter this year was, when you adjust for what happened the year before, was pretty good. But the market hasn't really seen that as yet. They're going to release their second quarter numbers on Thursday of this week. So I won't speak too much about that aspect of it. But it's very likely that the turnaround in their numbers will continue. I think once the market sees that and they see a return to the usual dividend stream, which brings a lot of buyers into that stock, I believe you'll see that price likely to start trending back up. That is the main driver of the losses to date. It's 2.4 billion of the total losses to date. And so once that stock gets back to its normal trading pattern, you eliminate all of that in one quarter. You may very well see that by the end of the third quarter. So, that's potential good news that's coming down the road. The next biggest driver is not as easy an analysis, which is Jamaica Broilers. So unlike Supreme Ventures, where you saw the results getting better, you'll see the dividends come back. With broilers, you're still trying to figure out, what's happening. We were alerted in early January about a third quarter issue. And then shortly thereafter, there seems to be an additional valuation issue. The management team, has been taking some good steps to try and, reassure investors. I think the most recent one, which I think is unprecedented, is to put out monthly management accounts. And I think until we get that first set of management accounts and start to analyze, what really is happening there, we really can't speak with much confidence or authority as, where we see the bottom in the stock, or have we passed that bottom and it has turned. So that's second largest contributor to the fall off in the portfolio today. That's about $700-800 million. And then the third is NCB. Again, similar to SVL, it's pretty simple to see what's happening in NCB, and it's perfect for like MJE because it's a significant value. The stock I think traded today at around $30. That's a potential PE of about 3 times, give or take. I mean, to buy NCB at a 3 times PE is like winning a lotto every day of the week. I'll admit there's a lot of Netflix drama surrounding it, but again, that's why you have an entity like MGE to take advantage of it, to be able to see through what is happening. You have the largest bank in the country. You have a bank that is regulated by one of the potentially the best regulators in the region, Bank of Jamaica. In compliance with their regulatory ratios, they're making significant profits. So therefore, I think it's more to do with this association of the trials and tribulations of its chairman, as opposed to the actual numbers surrounding the stock. Will it be next week? Maybe not. Will it be by the end of this year? Probably. By the end of next year, very likely. There's one of 3 outcomes. The bondholder creditors to the chairman's companies, give him forbearance, which kills the supply in the market. 2, he sells. So that would bring in somebody new, and that resolves itself that way. And 3, the combination of both. I think we're rapidly getting there. I don't know how much lower the stock can go. We're actually now seeing very good buying on the other side. And so, for example, the last 10 days, NCB has traded an average of about 1.9 million shares a day. Today, even down at $30, a million plus traded today. You see a buyer out there trying to get the stock back up to 40. They buy up to 40. Somebody says on the 32. So this is starting to show signs of bouncing along the bottom. But let's see. I think it's a good opportunity for people to add to its portfolio. But for an entity like MJE, who has the capital to potentially add, but more importantly, to wait out the volatility, it's a good stock to hold on. Their results are also due. The 6 months, I believe their 9-month results are due, the June 30 numbers. So that would give us further insight as to what is happening there. So we continue to benefit from that 50-cent dividend. Remember, Guardian sold a subsidiary, of which a material portion of that sale price is due to NCB. While Trinidad has their US dollar issues, at some point in time, the US dollars will manifest itself for a dividend to be paid out to NCB Jamaica, which ultimately comes to the shareholders, including the chairman. The other good news there, whilst they issued the bond and didn't get the 300 million they wanted, they got 225 million US dollars, which is a material amount of money. So you're talking about external cash coming in to pay out bondholders regionally. And, you know, our business is fair and greed. People are worried about getting their principal. Now that they get by their principal, what do you do to invest? NCB has raised its bond at 11%. Everybody is in the marketplace trying to get a piece of it. 11% for such a strong company is a giveaway in my book every day of the week. So that's NCB. And as I said, those three entities account for over $3.7 billion of the year-to-date losses. You know, and we said we expect to see NCB and SVL put back value. Jury's still out on broilers, but we'll see from there. But the biggest thing for the quarter is that when you add back the unrealized losses, because all of those losses are mark to market, they're not realized losses, you'll actually see that for the quarter has been a phenomenal outturn given the volatility in the marketplace. And again, it speaks to the diversification of the Mayberry Group, where the equities market is soft, it's down. But here comes our real estate side of the business that gave us a nice gain from that side of the business, which for the quarter actually turned us around in a positive way when you add back the unrealized gains. Year to date, whilst when you add back the unrealized gains, we're not fully profitable, you will see the material difference that our underlying business continues to generate very good returns. Certainly our investment broker, a broker dealer, Mayberry Investments Limited, which was formerly the holding company, it's now a subsidiary, had a really good quarter. There were really good pipeline of projects coming up for the next quarter, so we expect their profits to continue to assist the group. Whitebase, who holds our private equity deals, you know, within the next 9 to 12 months, we're very likely to have a liquidity event, which will impact the financials and the dividends in a positive way. MGE, as you've all seen, you've seen an outturn there. The group continues to hold about 52% of MGE, and we've seen the share losses coming through from that. But ultimately, as those primary holding stocks reverse themselves, you will see those positive changes coming into the group. And again, similar to what Rachel has said, you know, we're celebrating 40 years of doing this. And, you know, it's not something that we've picked up from yesterday. And so we've seen these cycles in the marketplace. You know, we can't tell you when the market is going to come back exactly to the day, but we know it's going to be there because there's value. Stocks don't trade at 3 times PE for an extremely long period of time. After a while, people get it, they come in, they buy, and the stocks will start to trade up. Remember, this is the same main market that was traded north of 15 times. So these are buys that, you know, people have been asking for when it was at 15 times. Now that it's here, people think twice about buying. But as we say, MJE is the only stock you really need to own because we're here that understands the market. We will buy when you're afraid to buy. And don't worry, when we sell, you'll be able to get prices that you probably won't be able to get anymore. So, you know, I think the sun is shining. The light at the end of the tunnel is not a train. It's actually daylight. You know, I think once the election has passed, because that's another issue affecting the market. You know, a lot of people don't like to invest when an election is nigh. It's very likely the election is either a month or 3 months away. We'll find out in due course. I think when all of those headwinds pass, you know, we should see the market start to trend in the right direction. Thanks. The market start to trend in the right direction. Thanks.
Thanks, Gary. And yeah, I think we're aligned there. I think the market will start trending in the right direction after Chairman Berry. So based on Mr. Perry's response, you know, he's signaling that he believes that NCB is pretty much at the bottom. You know, there it can go no further. So there's a great opportunity to buy.
No, it can go further, but
We're
not
hoping.
much.
But agreed, not much. It's already how low can it go from 30?
Limbo.
I stop at 30. Well, it's a popular question on our program today, so I have to ask, is MJE considering averaging down on NCB? I mean, it has the capital structure to support this, so investors are asking. I know it's not an MJE forum, but considering, we are talking about.
Well, I mean, MJ is always looking for buys, and I don't think it's in our interest to signal what we are going to buy before we buy, because then we pay more for what we want to buy. That's not something we ever discuss.
Thank you. Mr. Parrott, I have another question. So we've been
Sure.
focusing a lot on MJE and the unrealized losses and how MJE's unrealized losses affects MGL's financial position. But
Mhm.
I want to talk about your joint venture. You recorded 2 billion growth
Yes.
year on year here, and I think you barely touched on.
Yeah, so in conjunction with the Musson Group of companies, which most people know is owned and controlled by PB Scott and his sister Melanie, we bought 33 acres of land out at Chalmers several years ago. And so we got a very good price at the time. And as you know, we have built one building, we have leased it, we've sold it. We built a second building. We haven't fully rented out the building as yet. We're on the verge of doing that. And when we built and sold the first building, we made a nice profit. It was a nice diversification play. But after the second building, we still had about 28 acres left. We've recently entered into a sale agreement to sell 8 acres, which we're waiting on the finalization of that to bring to profit. So whilst we're doing all of that, time has passed. We've revalued the property because, again, real estate prices have appreciated over the time. And so that $2 billion gain is a combination, of revaluation of the properties, the potential sale, not potential sale, the sale of 8.5 acres, 9 acres of some of that land. As I said earlier, it's about the diversification of our business. Most people know Mayberry as an equity outfit, which we are, but we're also one of the larger fixed income dealers in the marketplace. We're also one of the larger foreign exchange traders in the marketplace, and we also have positions in real estate in terms of proprietary real estate. We've just recently won another great opportunity. We've just recently picked up just under 1,000 acres of land in another parish. So we're always on the lookout for things to not only diversify our revenue streams, but different ways in which to create and add value. So, we expect Chalmers to continue to do well. I indicated last quarter we expected to have a tenant in place. Unfortunately, we didn't finish the negotiations, but keeping fingers crossed, we should have a tenant in place before the end of this quarter. And then we proceed towards selling. Once we do that, we start all over again. We look to build another building. But the piece that we've sold, those purchases are likely to build out a commercial area. So we're putting in roads, etc., as we continue to build out the long-term development of that. The beautiful thing is that it doesn't require a lot of capital from us, and we build based on demand that we see. So it's not as though we have to build and then wait and beg for somebody to take it. It doesn't create financial stress. And in some instances, the longer we wait, is the more value the land creates. So in some instances, they're like, don't rush, take your time, because as the development comes to fruition, the remaining land is just skyrocketing in terms of value. So that's a good deal. This has gone well. We have some other real estate assets that we're seeking to liquidate, and that will flow into our numbers over the next 3 to 6 months. So we're happy about it. It really helps to diversify our business, especially in times like this. And we'll continue going on the road to create value.
Thanks for that. So investors,
going down the road to create value.
thanks for that. So investors, they did book a 3.4 unrealized loss, but as Mr. Perry said, they're diversifying, and through this subsidiary, they were able to book a $2 billion revaluation gain, almost, not offsetting the unrealized losses. But and in addition to that, Mr. Perriton, I got that you're not only, booking paper gains, but you're monetizing.
I mean, that's why I'm happy you said that. I mean, when you adjust our numbers for the non-cash items, the group is generating real cash. That's why for the last quarter we had continued to pay dividends. Out of an abundance of caution, we didn't pay a dividend for this last quarter. But we believe as the market comes back, and we liquidate and get different liquidity events for some of the assets that we have, you'll see a resumption, not just a resumption, but a resumption at the same level that we had in prior periods. So, it's when there's a crisis, it's an opportunity to find very good deals, and I think that's what we're doing. We're making the investment. It's very difficult for some people who don't have the courage, for a better word, but have the experience to know that. Listen, you identify good stocks. You don't sell a company just because the market is bad. On the contrary, it's an opportunity to buy more of the company. And as I said, there are lots of companies right now that you can get at some really, really good prices. Watch your cash flow. Don't dump everything in, because yes, Rachel, it can go low. And so you don't want to spend all your cash one time, but you just have to be prudent, right? And so measure your cash flow, but still take on some of these assets. And when you're confident that the turn is there, back up the truck and take on some more. There, back up the truck and take on some more.
Yes, yes. Oh, and guys, remember we managing our concentration risk also. So let's not over
Correct.
concentrate ourselves on stocks that are extremely cheap right now.
Yes.
Um,
Remember, Mayberry is one of the few investment houses, Mayberry Investment, that offers you a margin loan against your equities. So for the more sophisticated investors, you don't have to liquidate your shares. You could actually access funding from your shares. You can actually access funding from your shares via Mayberry margin loan.
yes,
From your shares via Mayberry margin loan.
yes, that's true. So sorry, Patrick. Just one other question from me. So consider this spoke about our loan book. I noted that you reported a 76% increase in your loan portfolio.
That's primarily due to the margin book.
Yeah, I was about to
So
say.
that's primarily due to the customers are taking the opportunity
Yeah.
to leverage your portfolio, not necessarily to buy more stock, but sometimes to refinance other things that they have, because it's one of the quickest loans that you can have in terms of processing time. The interest rates is
What you
actually
mean by quick? Like how quick you can get a margin loan from Mayberry?
if you are a preferential customer, you can get a margin loan within an hour. So once you've signed up, you have your margin facility in place. Subject to availability, you can have the funds credited to your account within an hour of your request. If you're a new customer, depending on how quickly you set up, it can be done within 24 hours. So that's the beautiful thing about it, because it's an area that Mayberry has done very well in its 40 years. We've never had a delinquent margin loan. We've always been able to recover any loans that we've given against equities, because we have a proper platform. We have customers that are always willing to buy at the right price, and but what we find is that a lot of our customers, they use their margin facilities at Mayberry to deal with a lot of, for want of a better word, unforeseen expenses or opportunities that jump up on you. So people see a piece of land, they want to put a deposit down, they take a margin loan, put a deposit, then they go and refinance through a mortgage company. They see a painting they want to buy, etc., etc. So that's how easy it is. And as I said, it's a portfolio for us that has done very, very well over the years. We've never lost a cent on a portfolio. And for our customers who understand how to use it, it's one of the best tools that they have in their financial basket. It's one of the best tools that they have in their financial basket.
Thank you. We're aligned on the margin portfolio, especially, investors. If you're watching the market on a day-to-day basis, there's an opportunity, as Gary said, you can get a margin within an hour to take advantage of the opportunity before trading closes, should you choose to.
Sure, Rachel. One last question from me. Strategic outlook. Any planned new products, whether it's through MIL, MJE, white-base investments that is shareable?
Yeah, I think, ultimately, not I think, ultimately, what we're seeing in the marketplace, and we're getting a lot of requests and demand from our customers, is more managed type products. We're seeing growth in our managed business, and it's something that we want to do more of. I think you and Chris have been alluding to stuff, but I wouldn't be surprised if we have something similar to MJE in another asset class. MJE's equities, it has gone down very well with a really good subsection of our customers. They've been hearing about what we're doing on the real estate side in terms of Chalmers, etc. And, we've been getting requests, can we have something similar to that? So we're looking at it. And, as Mayberry Investments, the broker dealer, we've always been at the forefront of the regulatory requirement to be a trading organization, and much less of a proprietary owning assets and leveraging those assets. So every opportunity we get where we can create, for a better word, special purpose vehicles similar to MJE for different asset classes, it allows our traders in Mayberry to do more of what they would like, which is to trade. And then at the same time, our customers who want exposure to certain assets, when they come in, it's easier for us to move in that direction. So, if you want that investment manager to manage your portfolio of business, Mayberry is now the place to be. Has always been, but we're making it clearer to people. As I said, most people thought we were just an equity house. They don't realize that, we're one of the biggest bond arrangers. We're one of the big, not just equity arrangers, but right across, the financial landscape, we have expertise there. When people see what we're doing with Chalmers and the numbers that we're able to generate from Chalmers, and know some other pieces of real estate that we have, they see that we have that expertise as well. And I think once people recognize we have the expertise, then it puts us in a position to create managed products that they would want to be a part of, which will allow them to expand their investment horizons.
Thanks for that one. I know your increase in the managed business, but other revenue line items have also increased. Bond income increased 66%, fees and commission up almost 50%, FX also surged 246%. So, the other lines of the business are doing incredible. So I don't want the investors to not hear this.
That's what I alluded to. We're turning the security dealer business into what it should be, which is more dealing, or the word that people are more comfortable with, more trading. And that's what you're seeing in terms of the surge of the numbers. And certainly, as we build out our managed portfolio, you're likely to see where more of that occurs. So it's aligning the client's interests with ours, and removing potential conflicts. And so in doing that, both ourselves and the customer create more value.
Thank you. Thank you for that, Mr. Peart. All right, so I'm going to go to the online questions now. I've been neglecting you guys. All right, so first question for Mr. Berry from Limitless Podcast. What's your view on JPS possibly losing its monopoly?
So, JPS has a very special contract, which it can only be modified by the consent of both parties. And there's a limited window. If it's not mutually agreed, then the whole contract rolls over. So the government would have to find a sweet spot where JPS is not losing return, but Jamaica consumers are benefiting. I'm not. It's not clear to me that I haven't seen anything like that on the table. So right now, my bet is that the contract is going to roll over. As far as Mayberry is concerned, we don't have any investments that touch directly on it, but we do have all our investments are affected by it because to me, we have done a good job of managing our power system in Jamaica, and we're now almost at 40 cents a kilowatt hour. I mean, you know, my friend Omar Azan, he loves to talk about manufacturing, but I just don't see how you can manufacture anything at that price of energy and actually make a profit or be competitive. It's just not a realistic situation. So, it's a big one. It's a big one. Um, any government that can solve the energy problem in Jamaica will massively improve our ability to improve our output in every area because our energy price is sky high, ridiculously overpriced energy. So I don't know if that answers the question. That's my answer. So I don't know if that answers the question. That's my answer.
Thanks for that, Chairman. And just to add, investors, MGE owns a 10% stake in a renewable energy company. The government is aiming to get to 50% renewable by 2030. So we're of the view that, that company is positioned well to take advantage of some of those RFPs. And if, they should be awarded, which they stand a good chance of being awarded, that will directly improve their valuation. And in addition, MJE's valuation because they own a. Sure.
I would ask Limitless Podcast to try and get a copy of the existing contract between JPS and the government. And if he gives it a quick read, he may very well realize that the only thing that changes in that contract is the date. Thing that changes in that contract is the date. Some people don't like facts when they're telling a story, but JPS has a sweet, sweet deal. JPS has a sweet, sweet deal.
Thanks for that, Mr. Parrott. Another interesting question from Limitless Podcast, and I'm actually going to throw this out to both Mr. Berry and Mr. Parrott. Would you know if shorting were to come to the JC, would Mayberry use?
I'll take that one. It's unfortunate. I'm a director of the stock exchange for the time being, and it is one of the things that I have failed in doing. Because despite my best attempts, I have never been able to convince the JSE to get shorting done in my period. There's always a story as to why it hasn't happened, etc. I think they're getting closer to it. But to answer your question, yes, it would be something that Mayberry would be interested in. We are one of the champions of trying to get shorting in place. Because basically, in the absence of shorting, what happens, it takes the market a longer time to adjust. So for example, we're going through the doldrums now. It's a one-sided market. So people who have shares, they don't want to sell because that they're hoping that it can turn. But if you're able to short the stock, the market adjusts, for a better word, and clears quicker than it normally would. We have seen cycles that have lasted 2-3 years when if you had shorting in place, within 6 or 3 months, those cycles would have come out. I want to add, if and when it is finally put in place, shorting should only be done by very sophisticated investors who have very deep pockets that understand what they're doing. Because unlike trading on the long side, when you short a stock, you can have unlimited losses, right? So, to close my point, we're totally for it. It's just for the stock exchange to get out of their way to get it done. And hopefully by next year, we should see it in some way, shape, or form. The rules that they're coming with, it may not be available to the average person, but everything, the journey of 1,000 miles start at the first step. And ultimately, we'll get to a point where, for the relatively sophisticated investor and the average market person, will be able to do it. The investor and the average market person will be able to do it.
Thanks for that, Mr. Perry. So we have a few questions here. MIL, the brokerage arm of the company, and
Yeah.
their equity listings. They want to know, they heard that we have a pipeline of companies to list, and they want to know, what's the status on these? And I think
Well, Rachel is at the center of most of them, and obviously she can't speak about it because we have a couple that is with the regulator, and we're in a quiet period, so we can't speak to it. But notwithstanding, it's a very difficult time to get companies to come to market. It's always been difficult, especially if they don't qualify for the junior market, etc. But we continue to look for good deals, and you all should know the Mayberry ethos. When we list a company, it is a win-win-win. So it is a win for the company that is listing. It is a win for Mayberry and its customers. It's a win for the market, and it's a win for the government. It's a win all over. Unfortunately, we've seen several listings that, in what I would refer to as kind of one-sided, in that, it doesn't satisfy all the different stakeholders. And, some of those deals, if they come to us, if we don't see the balance, we're not going to move forward with it. So when you see us come with a deal, it's a deal that we feel satisfies everybody, and everybody will benefit in some way, shape, or form. So we look forward to it. And as I said, I'm speaking on behalf of Rachel and Patrick because, they're the line people, and, they can't say what they shouldn't say. Line people, and, they can't say what they shouldn't say.
thank you. Thanks for protecting us on air.
You're welcome.
I have another one from Jerome here. So asset management was named as a focus, and we've seen the public servant push. We're having a campaign that we're pushing for civil servants.
Yes.
And he'd like to know, has that campaign been successful, and how has the growth been?
It's been successful. I know as I'd indicated earlier, it is an area that is growing for us. We'll continue to do similar campaigns because the public at large doesn't really see us in that space. But as they become more aware, we expect to get significantly more customers. So the target we're going after are relatively higher net worth. So even though we say public sectors, it was interesting to see the type of funds that we're able to get in, and we're pretty happy with it. And we'll continue to do similar drives, as we try to hit our objectives and targets. As we try to hit our objectives.
Is the following. So our traditional model is the very old broker-dealer model, where we have financial advisors that advise clients what securities to buy and sell. We still have that model. And we have been developing over time an asset management model. It's not like a mutual fund model, but it's a portfolio where clients can come in, own portfolios to manage in different asset classes, because we have more facility with digital software and stuff. So it's easy for us to manage more different accounts. So what that does is it allows us to service more people with less people because of the digital. So it cuts our costs, and it allows us to people who might not want to start with our traditional Mayberry figure can work their way up over time. So, we're focusing on clients who are lifetime investors who want to grow over time. So maybe you don't meet the minimum, but you can grow. You're willing to make a commitment. The asset management department has programs that you can start without having the traditional Mayberry minimum. So we see a huge market for that because lots of people have money sitting in their bank account and they don't know how to invest it, and that becomes a impediment for them to do anything. And so the asset management product basically, we have selected different asset managers and they are managing the client's money along the basis of a particular portfolio. So the client doesn't have to worry about, am I buying the wrong bond? Am I buying the right bond? Am I buying the right equity? They just go into the asset management department and says, okay, I want to put 70% in equities and 10% in cash, and 20% in fixed income, J-dollar, and asset management department will do that for them. So it's a much easier way, simpler way for the person who don't want to study balance sheets and P&Ls and so forth to get involved in the investment game. So that's what it's all about, investment game. So that's what it's all about.
Thanks, Chairman and viewers. I actually think it's a great product for young investors. We may not know what to invest in, or two, we just don't have the time. So, we're not watching the market every day. We're not there to take advantage of opportunities that may present itself. So as Chairman Berry said, we have specific asset managers designed to make those decisions for you. So if you don't have the time also, like myself, it's great to put some money there if you choose, to ensure that you're exposed to those great opportunities that we can capitalize on. All right, let me move to the next question. Okay, from Philip Burgess. I'm gonna throw this one out to both Mr. Parrott and Mr. Berry. What was the reason for not paying a dividends in Q2? Is there a specific plan for reinvestment?
It was just a matter of being prudent. We've seen where the market has come off. The question you asked earlier, Rachel, how much lower can it go? The reality is that markets can behave irrationally for an extended period of time. And, we just thought it was prudent that, let us hold a dividend. If the market does what we expect it to do, and also we have some private equity stuff that may have liquidity events later this year, you will not only get a resumption of dividend, but you'll also make up for the dividend that was not paid. So that's really the reasoning behind it. It was not paid. So that's really the reasoning behind it.
Okay, great. Thank you for that. And so they're already halfway there. They disclosed 150 million of the 300 million they paid last
Correct.
year. So I'm too looking forward to my dividend check. I love me a MGL dividend check. And I think that's it for today. I think I've pretty much covered all the questions that we have here on the social media panel. So I want to say that's it for today's discussion. Anil, Chris, Gary, and Patrick for making this a great discussion. And if you're curious about updates on our virtual investor forum, then find us on social media. We share our live investor forum. Then find us on social media. We share our live stream dates and our upcoming guests on our official social media pages. So give us a follow to learn all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Thanks again for joining, and congratulations to the Mayberry.
Bye, guys.
Bye.
Yeah, Barry.